Uh-oh.
And let me explain this.
King me.
Right, okay. But
This was quite fun. Gordon Johnson, a Tesla stock bear, went on TV and he got laughed at multiple times. And the second time was more interesting because he seemed maybe a bit confused there for a moment. Let's take a look at this full Ross Gerber and Gordon Johnson Tesla stock segment.
I don't think Tesla makes any money on the chargers, but there's no way to look at this.
That's not. No.
Well,
No,
can
no,
they?
no.
Because it's illegal to
Okay.
sell electricity. You can only sell time.
No. The way this is exactly what you guys were talking about is 100%. This is checkmate. Now, when you go back to the beginning of the story, Tesla had met with everybody and said, everybody should use our adapter. And they said, no, we're going to do our own. And in Europe, they make 2 adapters in the Tesla car, so you can use either one actually from the Tesla car. But this is setting a standard with the, really the biggest and still the most plentiful makers of EV other than Teslas are GM and eventually Ford. So when you look at the future, all the companies, whether you're a charging company or an EV company, can just switch to Tesla right now and just make it easy on everybody, And so this is checkmate. But what this Tesla, I asked Elon this once on Twitter, and he said that the margin they make on charging is 10%, because remember, they also do solar and storage. So their efficiency of charging is unlike any other company as well.
30% gross margin according to Elon Musk and 10% profitability, all costs included.
Not as an investor, but you drive a Tesla, correct?
Right.
Okay, I've driven almost not every, but a lot of electric cars. I haven't been able to notice, is there a slowdown? If you had to use an adapter, for some reason you're stuck, you can't use Tesla, you have to use CCS, right? There are adapters that you can use, just like we use on our phones. If you had to use the adapter, would that slow your charging down? And I'm asking because you wonder what a fait accompli this might be for the other standard, unless the adapter works fine and then nobody really cares.
Right. So when you're charging at lower levels, the adapter is super easy to use, and I use it all the time. So it's not like, it's just like what you were saying with your phone. If you just have like an iPhone plug adapter, you can use it, and Apple sells a heck of a lot of these adapters for $49. So that's also a business for Tesla as well. So I think users will have other charging options, and these aren't going to go away. And there'll be lots of adapters flying around for $49. That makes everybody a lot of money. But I think for, real EV adopters, you want to use the standard because of the supercharging network.
Yeah.
The superchargers don't work on the other plugs, and the supercharger fills up your car now in like 15 minutes.
Ross did not answer the question, and I couldn't really find anything online that would say if you use the adapter, would the charging speed actually slow down? I did not look for a long time, but if you do know anything, please leave a comment down below.
I got to imagine, Gordon, I want to get your take on all this, that this is going to, unless GM and Ford, and I think they may be, and Mike can correct me on this if I'm wrong, they're going to have to invest some money here, because otherwise Tesla's going to have to spend a ton of money to accommodate all these new cars.
right. So with respect to this being checkmate, we think it's the opposite of checkmate.
Uh-oh.
And let me explain this.
King me.
One of the only modes that Tesla had left was superchargers, right?
Yeah, let's forget about the vertical integration, the $1,000 all-in cost for the next generation motors, making the safest vehicles ever tested and generally at a lower cost compared to equivalent vehicles. I'm happy to see that when I read comments under this video, other people laughed too that Gordon said the opposite of checkmate. It was not just Ross Gerber. It certainly cracked me up really hard.
Now, if you buy a GM car, you have access to all of Tesla's superchargers. In Q1, Tesla's deferred revenue, which includes FSD and supercharging revenue, was roughly $3 billion of $19 billion. The overwhelming majority of that was FSD. They basically make nothing on superchargers.
To set up superchargers, it is somewhat capital intense, so it does take time to make profits. But here is what is clear. If you are basically going to be the only big provider of supercharging, of course, you will definitely make money. Especially if no one else can create these supercharger locations at a cheaper price than you can, which Tesla can definitely do. Just take a look at this data that Tesla provided.
In addition, roughly 80 to 85% of the charging people do is done at home. It's not done at superchargers.
So what you're saying here is if you own 15% of all of the gas stations in the US, you would make no money. It wouldn't matter at all because you're not making much money because it's only 15%. Looking at this chart, just in the US alone in 2021, gasoline station sales in the US were almost $600 billion. And just 15% of that number would be close to $100 billion, which would be more than Tesla's total revenue last year. Of course, I understand it costs less to charge an EV than it costs to fuel a gas-powered vehicle, but I think it's a mistake to say that the charging business is not going to have any positive material impact to Tesla's bottom line.
And in fact, what it does is, if you're buying some car other than a Tesla, now you don't have range anxiety. The way that GM and Ford are going to market this is, we now have thousands of chargers that we didn't have before. This is a huge negative for Tesla, not positive. And when you take a step back,
right, because someone's going to say, I wasn't going to buy the Ford F-150 Lightning because I didn't want to deal with the other stuff, but now I can use Tesla, and I love I have an F-150 gas car. Now I can just get my exact same car in electric, and I won't buy the Cybertruck.
And when people talk about, Tesla stock is up, look, Carvana was up 60% today, right?
That's a later segment in the show. That's a later segment.
Right, okay.
Gordon Johnson is getting laughed at multiple times during this one segment. In Europe, Tesla is currently testing these test drives where you don't need to call anyone or talk to anyone or meet anyone to actually go and test drive a Tesla vehicle. Tesla vehicles are just parked, you come in, you drive for 30 minutes or an hour, and then you go about your day. You don't need to talk to anyone. More non-Tesla vehicles at Tesla superchargers could mean that Tesla could just leave a few vehicles here and there for everyone to test drive while someone else is charging their car, and they don't have much to do probably anyway. So there's a Tesla that you can test for free. There's no person, so you don't need to bother anyone. You just go in and you go and try that car. I think that will make sales if Tesla does it.
But Gordon, what you're saying is true, Gordon. Gordon, what you're saying is true, but the point is EV adoption.
Ross, let him finish his comment. Go ahead, Gordon.
So Tesla's gross margins, Q1 22 to Q1 23, have went from 29% to 19%. They've now produced more cars than they've sold 4 quarters in a row. That's a record. They now are cutting prices. We just got another price cut today. Elon Musk said at the analyst day, they're facing economic problems, meaning their margins are probably going to move even lower. Just because the stock price is up does not change the fact that Tesla is struggling as a company.
But it definitely for sure 100% changes one thing, and this thing actually matters in the long term especially, and that is you are now more wrong about Tesla stock than you were even previously, and previously you were terrifyingly wrong about Tesla stock already.
And what this opening up their superchargers does is makes it more likely that people are going to buy other cars.
Oh, I need to stop Gordon for a second there, because what it brings is more awareness to EVs in general. People that never considered owning EVs will now be thinking about buying an EV, and they will look at a Ford and they'll be like, that doesn't seem all that good compared to a Tesla. Let me get a Tesla instead of a Ford. It will generate some sales for Ford and GM for sure, but it will generate even more sales for Tesla.
This is not good for Tesla, and we think when they report earnings, the numbers are going to disappoint.
I don't know about that, but I know that Gordon's price target for Tesla stock will definitely disappoint.
And again, don't use stock price to justify a bad story. Look at Carvana.
Well, I drove by a mall the other day, Ross, in New Jersey, where there must have been 1,000 Teslas sitting in the mall parking lot. I didn't know if they were sold and not delivered or unsold. I'd like to find out, actually. It's an interesting story. Stock's up 10 days in a row. It's added like 2 Procter & Gamble's worth of market cap. I mean, at what point, even as a Super Bull, do you start to trim and say, you know what, I got to sell some. I've made so much money here.
Well, definitely not yet. In my personal opinion, Tesla stock is still dirt cheap if you are investing for the long term.
Well, like in my fund GK, Tesla and NVIDIA are top holdings. So it is, if you look at my trading, we trade to an allocation, with investments. So obviously, if this has now grown, like 100%, you're probably overweight these stocks. So for every investor, it's different based off their risk level, but most clients are much more conservative than, wanting to take a huge amount of risk in 2 stocks. So we've trimmed a little bit of Tesla, but it's irrelevant of our position that Tesla is one of the most consequential companies in the world. And now with EV adoption in just full swing, this is what Tesla's about. This is what Gordon doesn't understand. It's about EV adoption. Tesla will succeed even greater with other people succeeding. It shouldn't be one market. And if we're going to sell, 35 or 40 or 50 million EVs a year, we need all these companies to succeed.
I view this deal as a win-win. GM wins, Ford wins, and Tesla wins too. The only way that I think Tesla could lose from this is if Tesla stops innovating and stops making its EVs quite a bit better than GM's EVs and Ford's EVs. I don't think that will happen, so I think this news is bullish. YouTube wants you to watch this video next, and in this video I talk about why Tesla board members are now buying more Tesla stock. My name is Matt. Always just like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.